Hey everyone, it's Minnesuma here. I haven't uploaded videos in quite a while, have been away for a few weeks, but it's back on track and with what a fantastic news. We've got majority of the sectors this week in positive, with big upside on the technology, followed by the consumer cyclical, communication services, industrial, financials, energy utilities, pretty much everything in deep green. The fear and greed index currently shows at the level of greed. Looking into the most important part, the relative performance of the different indexes, we have the Euro Stock 50 at 11.46% up since the beginning of this year, since January 1st. Then we have the Nasdaq, which is finally in the positive or in the green area at 1.30% up, the SP 500 0.87%, the Dow Jones 0.19. So the three American indexes are already in the positive area, and the only one trading negatively is the Russell 2000, which is minus 5.14%. Now, even though the max drawdown we've got this year with the Nasdaq falling almost 19% and then the Russell 2000 below to 20%, we pretty much have the three major indexes or the American indexes already up and positive since the beginning of the year. It's very important to acknowledge that overall, over the last 10 years, we can see clearly that the strength of the American market has been extremely, extremely extraordinary. So even if we zoom out since 2013 approximately, and then we see the performance of the different stocks, we can see how the Nasdaq multiplied by almost 6 times, the SP 500 by 2.3, the Dow Jones Industrial Average by 1.7, and then the Russell 2000 91%. All those indexes absolutely beat it. For example, the performance of the Eurostock 50, even though the Eurostock 50 is leading this year when comparing with American markets, it's very important to mention that over the long term, the American indexes has performed overall better. When comparing the VIX with the SP 500, we clearly see that when we did a minimum on the 7th of April this year, we have a peak in volatility, and then this acts exactly as an actual butterfly. So whatever you see on the left, you tend to see replicated on the right side. When the market goes up, volatility tend to trend lower. When the volatility increases, you can see negative returns on the SP 500. So the more we see the volatility trending down, the more we will see the SP 500 trending up. This is more an indicator to see what potential areas of buying are we looking for indices specifically, and take those areas as an actual buy opportunity. Looking at the behavior of the golden cross system, which I have configured on the Dow Jones, on the SP 500, and then on the Nasdaq, we've got the entry position back in 2023, and then we have the exit position either at the end of 2024 or early 2025. My systems are configured for long position on those three indexes, and then short positions for the SP 500 and then for the Nasdaq. The backtest has been done for 30 years. Obviously, I haven't been trading for such long time of period, but the results has been better than the behavior of those indexes, especially the buy and hold. I am not a supporter of buy and hold. Instead, I'm a person that believes to be until the trend finishes and jump in once the trend again begins. That being said, we had the sell section or the sell signal on the long position, and then we don't have a buy signal just yet. So we need to wait essentially for a buy signal when following this system. Moving into the charts, we had the Dow Jones Industrial Average first for the indexes analysis. So we have a first Fibonacci wave retracement, then we have a second one, which was achieved. We have a massive double top that was as well achieved on the bearish objective. Then we have a trending a line trending lower, and then we have the breakout point, and since then the price has been reversing it. I must say that this is kind of difficult to get this kind of structures because the most difficult part was the 7th of April, which we said that if the price was lost on the 7th of April, then things are going to look ugly. It wasn't. At least we haven't come across that situation yet, which is possible, and the price is basically normally bouncing back. Now, how much will be the bounce? So we already broke the whole Fibonacci retracement movement on the British objective. We break through the 61.8%. We are now above the 200 moving average, and by following technical analysis, we have higher probabilities to go to the 45,135 area on the Dow Jones, meaning all-time highs, versus going back to the 7th of April. What is going to do? I have no idea. Trying to tell you what it's going to do is lying to you. I'll be simply not being truthful. By matter of probabilities, once we have broken the main resistance, which was previously here, there is higher probabilities that we go to all-time highs than going to the previous minimum. The Russell 2000 is clearly one of the worst performers in terms of indexes, if not the worst. We've got the correction that was basically a first Fibonacci retracement, second one, and potentially a third one. Then we have a channel of consolidation, we have a breakthrough, and now the first area of resistance is going to be the 200 moving average that goes in the 2140 area. Moving into the SP 500, we have it almost a V shape. So we have the correction, and then the price goes up as quickly as almost as it went down. By matter of probabilities, we are close to all-time highs and going to the previous minimum. As said before, prices don't usually jump sharply down, and they don't usually jump sharply up, especially for indexes. This is a V recovery. It's very difficult to catch such type of strategies. In case you were in this type of strategy and you wanted to be in, good entry strategy point is always above the 61.8 area when the worst has happened. We literally opened that with a gap. The 200 moving average now is below, so we certainly have high probabilities to go to all-time highs, meaning that I'm positive with the SP 500. Exactly the same analysis for the Nasdaq. We had almost a double top, very close these two maximums. We lost the two maximums between this minimum. Then we have the correction, first Fibonacci wave retracement, and then the second one. If you don't see, I can quickly draw here. This is the first one, and then we have the second one. And once the second one was achieved, which was the 7th of April, then we have massive entry of capital. We have a bit of consolidation. We break through. We have the breakout. The price was bouncing back. The 200 moving average acted as a resistance here and here. Then the 200 moving average was decreasing or slowing down the price. And then on the 12th of May, we have a beautiful gap. That's basically the first area of support, specifically at the close of the 9th of May. And the prices, by matter of probability, we have higher probabilities to go to all-time highs than, as mentioned before, going to the 7th of April. I'm going to move quickly into stocks, specifically into the 7 Magnificent. We have Apple correcting, doing worse than the indexes. Overall, Apple is not in a very strong position at the moment. I'm not negative with this position over the long term, simply because when we look at the chart, and if we take the whole history, this is Apple. You can clearly see that has had corrections, but overall, very strong company, very strong fundamentals, and very strong outlook of it. Now, whether I invest based on fundamentals or whether I invest based on technicals, it doesn't matter. At the end of the day, the only thing you need to look at is to make sure that you are on the stock as long as it performs good. Once the stock doesn't perform well, you probably might want to look at something else. That being said, on a technical analysis standpoint of view, we currently are forming like an ascending triangle, and then the first resistance area will be the 200 moving average that passes through the 223. Then moving into the next one, Amazon, they have an ascending triangle pretty much. And then the price went beyond with a gap in this area, bounced back, and now this area act as a resistance. Pretty much like the behavior of Amazon, how well has been performing over the last, since 2022, we have a massive upside. Then we have a natural correction, which was part of this actually increase. And now it seems like the price wanted to go to all-time highs. Also, if you see here, you can see that the price bounced or basically rested in this previous resistance area, and now we have literally the price held by the same or by the previous basically top, which is positive. Moving into Google, Google is doing overall worse than their competitors. Probably one of the worst in the SP in the within the Seven Magnificents. We don't have much here to comment rather than the price is currently trying to break through the 200 moving average, and then we need to go beyond the one on the 25th of March this year. If we go that, then we'll be visiting with high probability the previous maximums in the 206 area. Meta, we almost had a recovery in V shape. Also, we have beautifully here, if I draw, we have a double bottom. So two minimums connected in the same area. They break through the previous maximum, and they actually have an objective target towards 697, 700. So by a matter of probabilities, as soon as we break through the 200 moving average and as soon as we activate the double bottom, it cannot be negative with Meta either. Microsoft, surprisingly, very strong. We almost have reaching all-time highs. We also have a beautifully gap that was achieved on we had that on the 1 of May. On that session, a lot of buyers entry, and then we keep the continuation. For those who are simply new, I highly don't recommend to short this gap of gaps, simply because this is actually buyers who are willing to hold or to own the stock, and these type of gaps take time to be closed. So yep, high probabilities to go to all-time highs and very strong Microsoft. Last entry point was exactly here on the 23rd of April, if we follow technical analysis. And then it was very difficult to take opportunity here if you didn't enter before, simply because the 200 moving average was breakthrough with a gap. Now, it's a good timing to actually buy. Well, it's not me to say. The only thing I can say is you have high risk at the moment because the 200 moving average is at a distance of minus 19%. And the real support you have below that is at about 22%. So highly depends on your method of investment, but if you don't feel comfortable with a 22%, you probably shouldn't be in this trade. Then moving into NVIDIA. So NVIDIA, we have actually a consolidation channel. If I draw here and if I draw here, we have a consolidation channel that was broke exactly on the 13th of 9th of May. And then if we measure this downtrend channel, and if we take this structure up, so if I take this and then try to draw it one more time, because I cannot grab not this one. Okay, I'm gonna try then with a cube. And then if we move up, we have an objective to 150, which equals the previous basically almost all-time highs that passes around the 148 area. Bullish for NVIDIA, and I cannot say negative things because so far is trending higher up, very strong recovery. In case you are not in, just simply wait until the next stop. And I personally don't like to catch things that are very far from support or they don't have any nearby support area. Moving into Tesla, we have a triangle. It was broke up on the 28th of April. Then we have a bit of consolidation, again with another entry. We broke the 200 moving average with a bit of gap, and then the continuation going up. Exactly the same as NVIDIA, we can project an objective which almost has been achieved, specifically around the 360 area, which correspond to the previous resistance overall here. That being said, I'm very happy overall with the performance of Tesla. It seems like the worst has happened, and we need to see how it evolves. But we are closer as well to the target. Usually after the target, people who take this position, they will usually cash out, and then we'll see how the price respond. So we already shared two strategies that are already on. We have the Tesla one, we have the NVIDIA one. We pretty much don't have any other strategy currently activated for the 7 Magnificents. Then we're going to move into the crypto, specifically the Bitcoin, and then to the Ethereum. So Bitcoin, we have a downtrend channel as well here. And if we connect here, we broke that on the 12th of April. We have strong entry or strong bullish signal breaking through the 200 moving average, and since then we have basically trending higher. From a technical standpoint, we are close to all-time highs, and last entry or good entry point was actually the 10th of April 2025. For those that prefer to have actually confirmation, then it will be best after the 200 moving average has been broke. Overall, very strong outlook for Bitcoin. Unfortunately, we cannot say the same for Ethereum, even though we have recovery quite a lot. The overall performance of Ethereum is overall worse than Bitcoin. If you have to choose one of the two by strength, then by far Bitcoin has performing better than Ethereum over the last few years. And if you are looking to entry into Ethereum, then the last area to look at basically is the 200 moving average, which passes to the 2,373. Very strong bullish signal on the 7th of May, and it's very important that we don't lose the previous minimum created on the April on the 9th of April. That's pretty much everything for this week. I hope you like, you subscribe, and if you have any particular recommendations or feedback, please help me, increasing the of reaching more people. And then I hope you enjoy, and see you until next time. Bye bye.